Hello friends, welcome to Stock Mart channel. Here in this video, we're going to discuss about the company which has given very good returns for its shareholders during its IPO time. The name of the company is Happiest Mind Technologies Limited. Mr. Ashok Soota, he's the founding executive chairman of Happiest Mind Technologies. He's an Indian IT entrepreneur who served for more than 30 years, was widely recognized as one of the pioneering leaders of the Indian IT industry. In 1965, Mr. Ashok Soota started his career with the Shriram Group of Industries in India. From 1984 to 1999, he served as president of Wipro Infotech. During his term of office, Wipro's IT business grew from $2 million in 1984 to $500 million in 1999. In the same year, Mr. Ashok Soota co-founded Mindtree. He is the founding chairman of Mindtree in 2007 and Happiest Mind Technologies in 2020. So he has led both the IPOs successfully. And this company was rated as great place to work. About the company, it is incorporated in the year 2011. Happiest Mind Technologies Limited is a next generation IT solutions and services company. If you look at its business overview, the company offers internet protocols and domain expertise across a set of focused areas that includes digital transformation and enterprise solutions, product engineering services, infrastructure management, security testing, and consulting. In the solutions space, focus areas are security, mobile to mobile, and mobility solutions. Additionally, company is an authorized partner with global information technology players to deploy their services and create custom solutions. Presently, Happiest Minds has 150 plus active clients. The business units of the company is aided by the centers of excellence, which are Internet of Things, Analytics, Artificial Intelligence, Development Operations, Blockchain, Web Technologies, Cloud, Metaverse, Digital Process Automation, etc. The company delivers its services across industry sectors such as edutech, high-tech, banking, financial services and insurance, manufacturing, retail, energy and utilities, media and entertainment, travel, etc. The company is headquartered in India, that is in Bangalore, and has its operations in Australia, Singapore, USA, Canada, and United Kingdom. In product engineering services, the company has made a revenue of 691.65 crores with a contribution of 47.7%. Under digital business services, the company has made a revenue of 430 crores with a revenue contribution of 29.7%. Under infrastructure management and security services, the company has made a revenue of 306 crores with a revenue contribution of 21.2%. The company is expanding its global footprint across the world. It has two offices at Europe, one in Sydney, one in UAE, seven offices in India. Across US and Canada, it has eight offices. As of March 31, 2023, the company had 237 active clients at a 91% repeat rate. The year saw the company adding 46 new clients and bagging prestigious orders from both new and existing ones. The clientele includes 55 Fortune 2000, Forbes 200 billion-dollar corporations, and 43 of the clients gave $1 million plus. The company have grown at an average revenue per customer by 3.7% to US dollars 8,03,000. Geographically, if we look at the revenue model, 71.9% of contribution comes from US, 8.7% from Europe, 15.5% from India, and 3.9% from the rest of the world. If we talk about the digital revenue, 44.2% comes from digital infra or cloud, 22.2% from software as a service, 13.9% comes from analytics, 4.6% from Internet of Things, 10.1% comes from security, and 4.9% from others. Alongside, if we look at the business verticals, 24.1% comes from edutech, 14.8% comes from high tech, 7.1% from retail, and etc. On revenue concentration, 12.8% of revenue comes from the top first customer, 28% comes from the top 5 customers, 40.8% from top 10, and 55% from top 20. And if you look at the payment receivables, it is increasing year on year and quarter on quarter. So that is a good sign for the company. So good to know that both the revenue is increasing as well as the customer base is also increasing for the company, as they have a lot of future projects from their clients. Attrition is something which is very critical and threatful for any companies, because the company invests a lot of money on recruitment and training. Good to see that quarter on quarter, the average performance of attrition is going down for the company, which is very good. The company's net worth is increasing year on year. If you see from financial year 2019, it was at 66 crores to the levels of 838 crores, which is very phenomenal. Also, if we see that the return on capital employed is increasing from 28.9% in 2020 to the levels of 33.1% in 2023. Also, the return on equity is increased from 27.1% in FY20 to the levels of 28.1% in FY 2023, which is very good. Both EBITDA and EBITDA margin sees good uptrend. EBITDA grew by 26.2%, led by increased income. The company continues to be among the top league of comparable companies in terms of margin. Also, if we look at the total income, it is increased from the levels of 601 crore in FY 2019 to the levels of 1450 crores in FY 2023, which is a very good numbers with a CAGR of 28.3% increase. This is driven by the strong growth across the business units and centers of excellence. PAT, that is profit after tax, increased 27.5%, which is in line with the revenue growth. Also, if you look at the free cash flows, the company maintains a strong cash conversion ratio of 96%, resulting in a 25.5% increase in free cash flows during the year. About the shareholding pattern of the company, promoters holding 53.24%, followed by mutual funds with 0.78, domestic institutional investors with 0.48%, foreign institutions having 4.52%, retail and the others having 40.98%. The percentage of pledged shares are very minimal, that is approximately around 4%, which is nothing to worry about the company. The IPO of Happiest Mind Technologies Limited was oversubscribed 151 times, and it became India's most successful first-time share sales of this decade, while it has raised 700 crores. The company is expected to expand at an annualized rate of 20%, that is almost twice of the industry's growth rate. Presently, the share is trading at the levels of 898 rupees from 358 rupees in September 14, 2020. That is at the time of launching IPO. So overall, if you see that it has given 150% returns for the shareholders. Presently, the share price has corrected almost 40% from the highest price of 1503 rupees to 898 rupees. Hence, it has given opportunity to accumulate the stock at this present levels, even though the stock PE is greater than the industry PE. The company has delivered good profit growth of 63% CAGR over the last 5 years. Its 3 years return on equity track record is 32%, which is very good. And the company has been maintaining a healthy dividend payout of 30%. If you look at the cons, stock is trading at 16.1 times its book value. So this is not a major threat and nothing to worry about it. So all fundamentals looks very good for the company, especially with their business outlook and healthy future order book. What is your say? Please do share your inputs in the comments section, and if you like the content of this video, please do like, share with your friends, and do subscribe for more such interesting videos. Jai Hind.